Books of original entry, special journals or day books. Introduction of topic, lecture 1. Suitable for all accounting students, Cambridge or Intermediate Board, Karachi. Let's have the introduction of the topic. Books of original entry are known as day books. These are the books in which the transaction is firstly recorded by the accountant. It means when any business transaction takes place, it is firstly recorded in the book of original entry. Now what are these books? Which books are known as the day books? These are the books which are known as the books of original entry or the day books. Sales day book, sales return day book, purchases day book, purchases return day book, cash books, and journal. The data from sales day book and sales return day book is further transferred to the sales ledger and to the journal ledger. Purchases day book, purchases return day book data is transferred to the purchases ledger and to the journal ledger. Cash book and journal data is only transferred to the journal ledger. So these are commonly known as the books of original entry or the specialized journals. These books are known as either journals or day books. Entries are made to them every day. These commonly used books of original entry are particularly made for these purposes, like sales day book or sales journal is only prepared to record credit sale of goods only. The goods means merchandise. It means if anything other than goods or merchandise for that business is sold out, it will not be recorded in the sales day book. Or if the sales are not on credit, they are for cash, they will not be recorded in the sales journal or sales day book. This book is particularly prepared for credit sale of goods or merchandise only. Then comes the purchases day book, which is also known as purchases journal. Similarly, this is recorded. The credit purchases of goods only are recorded in the purchases journal. If merchandise or goods are purchased for cash, they will not be recorded in purchases book. The cash purchases and cash sales will be recorded in journal because it is meant for all purposes. Similarly, if we are purchasing anything other than goods, they will not be recorded in purchases journal. Then comes return inward day book or return inward journal. This is also known as sales return journal. The goods which are already sold to the customer, if they are defective or not according to their requirement, they bring it back to the seller, and that is termed as the sales returns. This book is particularly prepared to record the return of sales or the return inwards. Then comes the return outward day book or the purchase return journal. The goods which were already purchased by the business or the merchandise which was purchased by the business, if that is defective or in excess or is not according to the requirement of the purchaser, then it is returned by us to the supplier. Those goods are known as purchase return, and this journal is particularly prepared to record the return of purchased goods. Then comes the fifth one, cash book. Different videos are already prepared on this topic. This is particularly a book in which cash receipts and payments are recorded. Only the cash transactions are recorded in this book, either the cash payments done in the cash form or through bank. Then comes the journal. All types of transactions are recorded in the journal, either cash or credit, either goods or any other thing. So these are the common used books. Now let's have a look on their formats. How do they look like? This is the format of purchase day book or purchase journal. These are the common the columns which are used in the purchase day book or purchase journal. Page number is mentioned for reference. Date column, name, invoice, amount. Then comes purchase, return and allowance book or return outward book. Page number is assumed by us. The common columns are date, name, note, amount. Then comes the sales day book or sales journal. Any page number is given for reference. The columns are date, name, invoice number, amount. Then comes the return inward day book or the sales return journal. Date, name, no, amount and the page number. Types of accounts. What are the types of accounts which we prepared in the topic of specialized journals? We prepare personal accounts. These are for debtors and creditors. That means the customers and suppliers. We prepare impersonal accounts which are divided into real accounts and nominal accounts. What are real accounts? Real accounts are the accounts in which we record our possessions, those goods which we possess, mainly the assets like building, machinery, inventory, etc. Nominal accounts are those in which we record the expenses and capital and things. Types of ledgers. What are the ledgers which we prepared in the topic of specialized journals? We prepare sales ledgers. They are also known as the debtor ledgers or the receivables ledgers. We prepare the personal accounts of credit customers. Then we prepare purchases ledger. It is also referred to as the creditors ledgers or the trade payables ledgers. All the personal accounts of credit suppliers from whom we had purchased goods are kept in this ledger. Then comes the nominal ledgers. They are also referred to as journal ledgers. We prepare the cash account and the bank account and the account of credit suppliers and all other remaining accounts in this ledger. Then comes the cash book. These contain mainly the cash book and the petty cash book. They represent the double entry system of recording all cash and bank transactions. Important terms which we'll use in this topic of books of original entry. Contra entries, they are particularly used in the cash book. A contra entry is one which is recorded on both sides of cash book. These are the two common examples of contra entries. Cash deposited into bank or withdrawal of cash from bank for office use. A letter C is usually entered in the column to indicate that double entry is on the opposite side of the same book. More important terms, bank overdraft. A bank overdraft occurs when more has been paid out of the bank than was put into the bank. It means whatever was the available balance in our bank account, we had withdrawn excess amount from that amount, and that is why our balance has turned to negative. If you had kept only 1500 in the bank and you are withdrawing 1800 on your current account, the bank will give you the amount, but it will show you this remaining balance as the negative, and this is by nature a liability. Immediately we have to keep this money in the bank again. Bank do charge an overdraft fee for giving you this service. This is the shortest liability. We have to pay back the amount to the bank within hours or within few days. Cash discount. It is the discount given by supplier on immediate payment of cash. It is the allowance given to the customer when the account has been settled within a time limit given by the supplier. Discount allowed, which is also known as safe discount. This is the discount a business is given by the credit customers or debtors when they pay their account within set time. This is basically an expense for the business. Discount received or the purchase discount. When we purchase goods from the supplier and he offers us any discount on the early payment or reasons like that, we are offered a discount by the supplier. The discount which is received by us is known as the purchase discount and is considered as an income for the business. Dishonored check. A check which is wrongly prepared due to any error on the check. If the date is not written, if the amount in words or figures is not written clearly, if the check is torn, if there is lesser balance than the written amount on the check, then the check could be dishonored by the bank. So a check on which the banker refuses to give us the payment is known as a dishonored check. We do call it as a bounced check as well. Like, share, subscribe. Commerce Lecture Online.